Ever since Bitcoin hit the mainstream, China began taking a harsh view of the entire crypto space. With crypto's popularity skyrocketing, China recently banned mining operations throughout the whole country. With most miners being in Eastern Asia, this ban led to a huge crackdown on crypto. But what will be the end result of this massive and unexpected change? Will crypto end here? Why are industry experts seeing this new regulation as a positive impact? Before we continue, make sure to please leave a thumbs up and subscribe to our channel for the latest cryptocurrency news and updates. Why the crackdown has a long-term positive effect. China's outright ban on mining operations happened back in June. Even though this decision has led to a massive crypto crackdown, industry experts are supporting it. But why? In June, the Beijing office of the People's Bank of China called for the shutdown of a company that was suspected of providing software services for virtual currency transactions. The bank also warned institutions not to provide other services related to virtual currency, including providing business premises or marketing. But lashing out against digital currencies is nothing new for China. Back in 2013, the country ordered third-party payment providers to stop using Bitcoin. Chinese authorities put a stop to token sales in 2017. Later, they swore to continue to target crypto exchanges in 2019. But each time Beijing has lashed out at the crypto industry, people still kept on using or mining crypto, and so the rules eventually softened. This time, however, things appear to be a bit different. Everything started in May of 2021 when China banned payment companies and financial institutions from providing crypto-related services. Regulators dialed up the pressure on banks and payment businesses to stop providing cryptocurrency services. Weibo, on the other hand, which is somewhat like the Twitter of China, suspended crypto-related accounts. June was also welcomed with mass arrests in China of people suspected of using cryptocurrencies in immoral or illegal ways. To better understand the impact that China's ban had, we need to look no further than the chart of the Bitcoin hash rate, which is the measure of computing power being contributed to the network through mining. Here, you can better understand the effects that the ban had over the crypto space, which of course was a massive drop-off starting in June. However, this drop-off isn't as negative as you might think. Surprisingly, the more miners were getting cut off, the easier mining became for the people still able to operate. CEO of Riot Blockchain, Jason Les, said that the problem with so many miners was that they were competing with each other just to gain a similar fixed profit. But with fewer miners competing, mining Bitcoin not only gets easier, but the profits are higher. Jason Les also shared with us that the ban of mining crypto caused the network hash rate to drop a staggering 50% in just a few weeks. This inevitably led to a crackdown in the crypto market, which mainly happened due to how Bitcoin was designed. So, the crackdown and drop in hash rate created new opportunities for miners that were not affected by the ban. Interestingly, the mining ban in China has also helped Bitcoin toward a fundamental goal of becoming a truly decentralized network, which is basically the first step of Bitcoin becoming the primary currency in the future. As of July, half the world's Bitcoin miners have now gone dark after following Beijing's call for a severe crackdown on Bitcoin mining and trading. Fred Thiel, CEO of Marathon Digital Holdings and a member of the Bitcoin Mining Council, said that China's government is doing everything it can to ensure that Bitcoin and other cryptocurrencies disappear from the Chinese financial systems and economy. But let's be a bit empathetic here. Banned miners are not having the best of times. Imagine the government one day coming up to you and saying that your business is going to get shut down. This phenomenon, however, is not happening only in China. Mining operations are getting banned in a lot of places throughout Eastern Asia. Malaysian police have started to steamroll Bitcoin machines recently. Just a couple weeks ago, Malaysian police started by disposing of more than 1,000 Bitcoin mining machines seized in raids. The saddest part about it is that they didn't even show some human decency. The 1,069 mining machines were laid out in a car park of a police station in Miri last week and crushed with a steamroller. They have literally crushed $1.25 million worth of equipment throughout the entire crypto crackdown, which is enough to make any miner out there shed a tear. If that isn't enough, an additional 8 miners were arrested for supposedly stealing $2 million worth of electricity, which I think is a bunch of nonsense since miners have been doing this for ages, and up until today, no one was really caring about this electricity theft. According to police, mining operators are dangerous for life and property, as the power needed to mine crypto can cause power outages across the country. 6 of those arrested were later convicted of stealing electricity, jailed for 6 months, and fined. But why is this crackdown happening now? You might be thinking, why in the world has China suddenly declared war on cryptocurrencies now? Why not earlier? Founding partner at Castle Island Ventures, Nick Carter, believes that one theory is that it's part of a broader law and order push ahead of the 100th anniversary of the Chinese Communist Party this year. They're cracking down on all sorts of undesirable behavior, and crypto has long been synonymous with crime on the mainland. Carter further explained that the largest ever Ponzi in crypto was likely Plus Token, which was a Chinese project. In that scheme, scammers swindled $5.7 $1.7 billion from investors and dozens were arrested. Another theory is that China is clearing the runway for its very own digital yuan, a central bank digital currency that's been in development since 2014. According to Carter, this is to ensure the adoption of China's central bank digital currency, and part of this is most probably to ensure financial surveillance activities to be able to see all economic activity. The digital yuan could, theoretically, give the government greater power to track spending in real time. But Carter struggles to face that Bitcoin and the digital yuan are different to the point that they can't really be considered direct competitors. That is certainly the most commonly cited reason. The most likely motivator, according to Carter, is that Beijing is looking to stem capital outflows through stable coins and cryptocurrencies. He said that China choking off the flow of yuan to crypto is a huge deal when it comes to the crypto crackdown. Spreading mining operations across the world is the solution. These miners are not stopping their mining companies just yet. In fact, they are finding new countries to continue their mining operations. The inquiries from miners looking for facility space in the U.S. have skyrocketed. Can you believe there have even been Chinese miners wandering around Texas asking people if they can show them where the nearest mining facility is located? Things have literally gone out of control due to the crypto crash, but this migration of banned mining companies out of China is also good for the crypto market. Companies that are able to host third-party miners within their facilities put them in a great position because they will now have an increased base of prospective customers looking for space. For many years, many Bitcoin enthusiasts were concerned about the hash rate being heavily concentrated in China. Now, miners are flocking to countries like the US, Kazakhstan, and Russia. This is a great change because, according to experts, the most dangerous thing for Bitcoin is for more than 50% of the hash rate to be located in any one country. This ban will probably not decrease the hash rate in the long term, as Chinese miners will soon find a way to open their mining companies in other countries. What do experts have to say about all of this? According to Nick Carter, stemming all Chinese retail into crypto totally moves the needle when it comes to the price of Bitcoin. He believes that this actually explains a lot of the market weakness and the sell-off. But the good news is that as the crackdown has accelerated and Bitcoin has stayed pretty flat, which suggests the market has digested this information. Fred Thiel, on the other hand, believes that prohibiting Bitcoin and crypto will actually help Bitcoin in the long term, and if China's goal was to kill Bitcoin by shutting down 50% of the mining capacity and prohibiting trading, it clearly failed to do so. The founder of Bitcoin-focused venture firm Stillmark, Alice Killeen, pointed out that this whole conversation may be a debatable point, as the government's capacity to effect a Bitcoin ban will only continue to wear down over time. Killeen expects this type of news to have less of an impact on Bitcoin's exchange rate than it has historically. She also strongly believes that there has been some level of industry interference to this news, as Bitcoin has been banned many times in many countries, and yet today it is still one of the most powerful and dominating digital currencies used by the public. What are your thoughts on the crypto crackdown? Let us know in the comments, and check out one of our other videos about crypto.